Have you ever bought a stock or crypto coin only to watch it plummet, or sold a winner too early, missing out on massive gains? If you have, you're not alone. You've been caught in the most common and most costly trap in investing, the herd mentality. And we're going to expose the psychological forces that make smart people do dumb things with their money, and more importantly, give you the 3 practical steps to break free from the herd and start investing like a pro. Stick around, and if you want to master your money mindset, hit that like button and subscribe. It's the ultimate paradox of the stock market. The goal is to buy low and sell high, yet the majority of retail investors consistently do the opposite. They buy high and sell low. Why? The answer lies in behavioral finance. Our brains are wired for survival, not for investing. When the market is soaring, driven by media hype and success stories, our primal instinct is greed, and even stronger, FOMO, the fear of missing out. We see everyone else making money, and we jump in at the peak, desperate not to be left behind. Then the market inevitably turns. As prices fall, that greed instantly flips to fear and panic. The news is full of doom and gloom. Instead of seeing a discount, we see a disaster. To stop the pain, we sell our assets at a loss, locking in the worst possible outcome. This is the herd in full retreat. The herd doesn't follow logic, it follows emotion. And emotion is a terrible investment advisor. To truly be the herd, you must understand the emotional cycle that drives it. This cycle is predictable, and it's been repeating for centuries. It starts with optimism and belief. The market is recovering and people are cautiously buying. This quickly escalates to thrill and greed. This is where the media starts calling it a new paradigm or a can't-lose situation. The herd is buying everything, driving prices to unsustainable highs. This is the point of maximum financial risk. The peak is reached at delusion. Then the market corrects. The first dip is met with denial. It's just a temporary dip. But as the losses mount, denial turns to fear, then desperation, and finally panic. This is the point of maximum financial opportunity. But the herd is too busy selling to see it. The cycle bottoms out at despair and capitulation. Everyone who was going to sell has sold. The market is quiet and the media has moved on. The smart money, the non-herd investors are quietly accumulating assets. The herd buys at the top of the greed phase and sells at the bottom of the despair phase. Your goal is to do the exact opposite. So, how do you inoculate yourself against this powerful psychological virus? It comes down to 3 non-negotiable principles. First, you need a plan and you need to stick to it. The herd reacts to news. You must react to your rules. Your plan should define what you buy, why you buy it, how much you buy, and most importantly, when you will sell. A simple rule is dollar cost averaging, DCA. By committing to invest a fixed amount of money at regular intervals, you automatically buy more shares when the price is low and fewer when the price is high. It removes emotion entirely. Second, control your information diet. The media and social platforms are designed to trigger your emotions because fear and greed generate clicks. Unfollow the gurus and the noise. Focus on high-quality, long-term fundamental analysis. Instead of checking the price every hour, check the fundamentals of your investment every quarter. Is the company still profitable? Is the management still sound? If the fundamentals haven't changed, a price drop is a sale, not a signal to panic. Third, be comfortable being a contrarian. The greatest investors in history, from Warren Buffett to George Soros, made their fortunes by being greedy when others were fearful, and fearful when others were greedy. Remember Warren Buffett's famous advice: be fearful when others are greedy, and greedy when others are fearful. When the market feels scary, that's when you should be looking for opportunities. When everyone is celebrating, that's when you should be taking profits. The herd mentality is a powerful, invisible force that will steal your returns if you let it. But by implementing a rules-based plan, controlling your information diet, and embracing a contrarian mindset, you can transform from a victim of the market into a master of your own financial destiny. Which of these 3 steps are you going to implement first? Let me know in the comments below. And if you found this video helpful, please share it with one friend who needs to hear this message. Thanks for watching, and I'll see you in the next video.